There is thousands of different strategies out there. However, there is a very, very clear underlining situation at the minute, and that is that most strategies do not work, and we have to be quite honest with ourselves. Okay, how naive would you think, right, that an industry that is turning over $8 trillion every 24 hours wants to help you make some money, right? It's not, it's naive, basically, all right? Because the biggest players in this game are the institutions, aka the banks, okay? Then you got the hedge funds, okay? They're big players. Anyone that is a big player, and I'm talking about that has access to a lot of money, will move the market, okay? We are talking about the world and its economy at the moment, so you've got to bear that in mind, okay? So let's start by looking at the 4-hour time frame on XAUUSD, which is gold against the US dollar. Now, I need you guys to understand something. It's gold against the dollar, okay? The US dollar. So, if there is good news for the dollar, and we are looking at gold against the dollar, gold goes down and the US dollar goes up in value. So the charts will look like, which it is what it's doing right now, which is it's red and it's been coming down because there's been some good news for the US dollar as of recent events. Okay. When there is bad news on the US dollar, gold goes up. So if I was to show you gold over a longer period of time, say on a monthly time frame, this is what it looks like. It has been going up for the absolute longest, okay? And there is a ton of money here below that needs to get grabbed at some point. But right now, due to the situation around the world, gold has typically been quite bullish, which means it's been buying, okay? Now, I've gone back to the 4-hour time frame because this is a good time frame for you to start marking up the chart and for you to be able to analyze what is happening. Now, the reason why I am on the call today is because I have been marking up the charts now for in excess of 10 years. And from my markups, I've been able to make a ton of money. Okay. So, sorry, let me just get back to this person. Okay. So let me see if there's anyone else in the waiting room that I can admit. I think you guys are all coming in. There's only 62 left. Because I don't want there to be any lag when I go through the finer details for you guys to really be able to milk this. Okie dokie. Yes, admit. Right, there's only 37 people left to jump in. 36, 35, 34. Sorry, guys. But you don't want your friends to miss out this information, right? So we've got to be as nice and polite as we can and let them all in without my computer to crash. Okay, so they're all joining. Cool. All right, lovely. I think that's everyone in. Result. Okay, cool. So 4-hour time frame is a strong time frame to mark up the charts. And I'm going to show you the best way to do it because I've been doing it for, like I said, over 10 years and it has worked for me. So if it works for me, it's going to definitely work for you. Okay. So first things first, we want to draw a line, okay, at the very top of the market, a horizontal line, which I just grabbed from the left-hand side where I click here and it'll say horizontal line. Okay. This horizontal line allows me to put a line across my screen for me to understand where the market has been, okay? And I can see here that the market went all the way up to this price here and then basically turned around. So clearly there's a reaction point there, and we're going to talk about that in 1 minute, Okay. Now, at the same time, I will come here, I'll grab another I'll grab another horizontal line and I'll just do one at the bottom here. And we can see that here we had a reaction. Let me just go down a little bit lower. There we go. Here we can see we had a reaction right here. Okay, it came to this price and then it bounced back up. And if you just scroll your eyes to the left, you can see there was a wick here that came down, touched this line. You can see here we've had a candle wick almost touch it here. And you can see here on the 4-hour time frame that we had a green candle go past it and a red candle to come back down, touch the line before pushing up. Okay, so clearly we have a strong reaction point at this price as well. Okay, I'm going to tell you why these lines are so important, because you can work out what the market wants to do. Okay, so we've got 2 lines in now. So now we've like narrowed our picture for us to be not looking at everywhere else, but we're looking in this gap right here that we've got drawn on. Now, on the 4-hour time frame, I can grab another 4-hour horizontal line and I can have a look at what else we can see. Okay, so it's not just about having one line at the top and one line at the bottom. No, not at all. You might be able to see another area. And I'm going to try and identify that right now. And I can see one right here. Okay. I can see one right here where we've had numerous touches here on the left-hand side where my mouse is. It touched this price and it came down. It touched it again, it came down before breaking it. And then when it did break it to then come back up, it touched it to come back down, touched it to come back down. I can see another touch right here. I can see another touch right here. And then obviously it's a little bit messy here, but it doesn't matter. The reality is there's enough touches here at this point. And what is that price? It's at 50.94. Okay. Now, all I'm going to do is I'm going to zoom out a little bit and I'm going to see if there's any other areas. Okay. Any other areas that this has reacted from on numerous occasions. So what I'm going to do is I'm just rolling my mouse up and down the screen until I can see another area. Once again, I can see right here, we've had a very clean reaction from this price. And right here, which this price is at 48.62. Okay. So this is how you identify zones on a 4-hour time frame. Okay. A 4-hour time frame. It's a strong time frame. I'm going to have a look if there's anything more while I'm here, and I'm going to try and identify them for you guys. So I can see another one right here. Okay. Now, like I said, these lines might look like they're a bit close together, but the reality of it is that they are not. We're on a 4-hour time frame, so the gap is quite big, okay? Just so you guys are fully aware. So here we can see that price came down, touched this area and pushed back up. We can see that it wicked off this line numerous occasions. We can see that it wicked it here as well. And then we can see that we've got a touch here. We've had another touch here. So we know that that price there is a strong area of reaction as well. So I'm just going to delete these these circles, and I'm going to make this a little bit cleaner for you guys. Okay, cool. So now this is enough for me, really. I mean, if I wanted to draw anything more, I can get one line there because of this reaction right here, this reaction right here, and these wicks that came down, touched this line before moving back up. These lines are just areas of a reaction. And ultimately, that's all you're looking for. So when you're trading, you just want to see a reaction, okay, from the market for you to be able to find an entry and make some money, okay? So now from the 4-hour, I go all the way down to the 15-minute time frame so I can have a closer look at what is going on, okay? So on a 15-minute time frame, now the candlesticks look a lot different because now each value of these candlesticks, they are now worth 15 minutes. It's what the market did in 15 minutes for you guys to see, okay, cool. Like for 15 minutes, it dropped. For 15 minutes, it went up. 15 minutes, it went down, etc., etc. Okay. Now we have drawn a line on the 4 hour time frame exactly at where the price is right now. Okay. Now, typically, I would either wait for a 5 minute or 15 minute to see what it does. Okay. So let's just zoom in a little bit. Okay. So I want you guys to focus because funnily enough, we're right on the line. Okay, which is interesting. Okay. So let's zoom in. Zoomage. Okay. So this is the area that we're looking for. You can see this black line that I've drawn across, okay? You can see where the market broke it, came back up, okay? Failed to close the body of the candle above, okay? Then it came down and once again, it closed below the line, okay? Now I have a candlestick that is pushing up. Now, what I'm going to do is I'm just going to check the 5 minute time frame to see how this looks, to see what we see. Now, typically, on a 5 or a 15 minute time frame, okay, 15 minute time frame being a little bit stronger than the 5 minute, okay, we would, if we was to see a, let me just show you. If we was to see it break and the body of this candle closes above this line, it's what we call a disrespect. Okay, it's disrespecting the zone now, which means it's probably not going to come down and it's going to work its way up for a little bit and come back down. Now, I have an indicator that is on my, I have an indicator that is currently on called FVG. So here you'll click indicator right here and you'll click FVG. That stands for Fair Value Gap. And it's Fair Value Gap Nephew Sam. Don't ask me what the Nephew Sam's about. I don't know. But FVG shows you where there's liquidity in the market, where the market has come down so quickly that it's left money behind. Now, if, for example, on typically on a 5 minute time frame, I see a candle that closes. So we've got 2 minutes and 10 seconds left. If I see this candle close above this line, okay, I would take that as it's probably going to buy now, okay? And I'd have my stop loss, below the previous low on a 5 minute time frame, okay? So what we're going to do is we're just going to simply wait 1 minute, 46 seconds to see how this plays out. In the meantime, I'm going to answer some questions because there is 800 of them at the moment and go from there. Where is your iconic tea? Hello, it's right here. And someone's already put sugar in it, so it tastes bloody amazing. Thank you very much, sir. Right, got the first question out the way. Next question, how do you mark up a zone? Well, the zones are basically areas where you've got multiple touches, okay? So for example, right? For example, if I was to zoom out a little bit and I was to go to this horizontal line and I thought, let me just draw one, okay? Around the bottom of this wick, right? What happened? And if I was to let me just dot this so I can show you that it's not a 4 hour line, okay? So it doesn't count. We'll make it smaller. Okay, cool. So here, where we've had a reaction, okay? Here we've had a reaction. If I run my eyes across, I can see multiple times that the market has come and touched it and then pushed up, touched it, then pushed up, touched it, then pushed up, right? So this is a potential area right here. If I'd marked this up on a 15-minute time frame and had already acknowledged that when this was coming down, I would have entered a buy at this price here. Once this closed here, I would have said, all right, cool, this is going up. And I would have had my stop loss like just below it somewhere. And I would have let it like ride up, okay? So Now I have to look for the next area as to like what way this is going. Okay. So now all I'm gonna do is go back to the 5 minute time frame. I can see that it's basically okay, not 100%, but basically respecting the the support line that I have, okay, and it's coming down, which means it can probably come back down to this line. However, I'm gonna wait for the 5 minute to finish for me to have a definitive answer. Because if I look at it carefully, okay, this candle finished on the line. It's not if it was to become green and finish up here, it'd be a buy. And if it was to close below here, it would be a sell. Okay. So hopefully that makes some sense to you guys. So yeah. All right, let me go back to the other 1 million questions that you guys have got today. Hey Ish, can you give us more info about order blocks? Okay, so an order block is typically, so the bigger the time frame, okay, once again, the bigger the time frame, the easier it is to acknowledge an order block. But an order block is typically when you have a red candle and then the very next candle is green. This is an order block right here. Okay. Did they? Oh. Sorry, imagine there's a meeting in front of me because I'm at a shisha lounge, right? And there's like 70 of them, but they might be leaving because they're scared of the bombs. Anyway, I'm here like it's still business, guys. Relax. So an order block is when you got a green and a red candle next to each other. This is an identified order block. That means there is a high probability that the market can come down to here. Okay. Which means this could still be a potential sell. Okay. Just FYI. So some people work off of order blocks, but there's a lot of noise that happens in between an order block. That's why catching an order block is, you know, not difficult, but you want to be able to actually catch the order block first. So you can catch it on smaller time frames as well, just FYI. So you guys are fully aware. You can. Okay, so let me go back to the 15 minutes and see what it's doing. Okay, cool. So this is looking like it's selling. If I go to the 5 minute time frame, I've got 2 minutes left. If this closes below, then I'll be like, all right, cool, this is a sell, and I'll sell it to the next zone. Okay. But let's just wait. Ish. What lines are more are important other than the top than the bottom? I feel like I could draw lots up and down, get confusing. Can you still cover the trend lines on how you, okay, cool. So the higher the time frame, okay, so the bigger the time frame, the stronger that line is. Now, this line that we drew was on a 4 hour, okay? It's bloody strong. So you would go off this line. Now, it's not about drawing a million lines, yeah? It's not. It's about drawing the most cleanest ones, the most evident or most obvious ones. Look, I've got obviously one at the top, one at the bottom, and I've got three in between. That is enough for me to go by. And then the other lines that I would do would either be on a 5 minute or a 15 minute time frame. Okay. So let me just go back. This is dumping. Let's go to the 15 minute. Okay, let's figure out where it's going. Okay. So we have the dotted area that is touched before and wicked off. Okay. If it breaks this line, where is the next area that it can go to? You just got to look at the previous lows and find the one that it has had the most touches from. Okay, which is probably this one here. Let me just make it a straight line so you guys can see that. Okay. Once again, I've got a touch here. I've got a touch here. I've got touches here. A bunch of movement there. If I zoom out, I can got another touch here. So yeah, this could probably sell down to 50.67. Okay. So I'll go back to the 5 minute and I've got 17 seconds left. I'll zoom in. And I would see how this finishes. and I'd say, all right, this is most likely going to sell, even though it's left a fair value gap here. I would look for a sell down to this area here. I would have my stop loss at this line here, for example, and this is my entry on wherever I get in. You can get in anywhere you want and see how this plays out. Some people wait for the 15-minute time frame. Let me just zoom out. Give me 1 sec. I mean, I'm gonna risk it for a chocolate biscuit, because it's followed my 5 minute rule and my 15-minute rule. So I'm gonna look to enter this, okay? And I'm gonna just show you now. I haven't entered yet, so just give me 1 second. If I just move this out of the way, I feel like it wants to touch this fair value gap. The best price would be to get in at 15.90. Otherwise, you're getting in now, which is showing us 50.86.7 for a sell. And I'd have my stop loss at the top of these wicks, which makes it 50.96. So you need this to push up to here in an ideal world. And then we could probably see a reaction down to 50.67, okay, which is a lot of pips. So once it reaches 50.90, okay, you could look to enter this market as a sell, okay? So we're almost there. And then my stop loss would be, say, 97, which is 70 pips, which isn't that scary. Okay. And instead of the 50.67 as my TP, I'm going to do 50.68. So to give it that extra oomph. And I'll do my stop loss at 15.97. 15.97, that would be my stop loss. And I'd enter anywhere here. Ideally 59, which is almost there. You can feel free to enter. Okay, it's only a 70 pip stop loss, so it shouldn't kill anyone. Do not over leverage your account. It is silly. But I believe that because it's broken this line here, that it should, technically speaking, come down and give me at least 60, 70 pips. So all I'm going to do here from this price where we would have entered at 89, I'm going to do 86. Let me just change the color. Sorry, it's not. 86.50 would be my TP1. Let me make it a little bit thicker so you guys can see. This will be my TP1 for this cell. I would have 83.5 as TP2. I would have 80.5 as my 80.5 as my TP3. Okay, like I said, it's a 70 pip stop loss. Okay, if this hits stop loss, which it can, okay, it shouldn't hurt you. Okay, 70 pips shouldn't take out your account or blow a chunk out of it. Okay, it shouldn't. Okay, just FYI. We'll go to 5 minutes. All right, so let's do the next TP. My TP4 would be 77.5. Sorry, 7.5. And then I'll just leave this bad boy here at the end as CP5. So if this trade comes in, capital IF, okay, it's 230 pips. Just saying. All right, cool. Last time some of you guys gave me some stick because I didn't enter a trade, so I entered this time. So, all right, we're all good. I put all the details in, got my cup of tea. Amazing. And I'm not gonna stress. Like whatever happens, happens. Okay. This is the markets. You're not supposed to get emotional. In the meantime, I'm gonna read some questions. Because the time is a bit shit, I'm not gonna lie. Okay. Okay, so listen, I'm gonna explain this to you guys one more time. Okay. So everyone's situation and everyone's circumstances are very different. Some of you can handle a 70 pip stop loss and it will not affect you and you will be absolutely fine and you will live to tell the story for another day. And some of you are so emotional that it just will not work, right? So if you see profit and at any given point you are happy, then just take the profit and call it a day, right? You do not need to be in every single trade. Okay. In an ideal world, my perfect entry would have been right here at 94. Now, due to the way that the market moved, it broke my structure and it showed me that it can potentially still come down. So all I did was I waited for the next 5-minute candle to close. It happened to close on this fair value gap right here. Okay. And I expect this to turn around and give me at least 30 to 60 to 90 to 120 pips, and then potentially the big bad boy TP down here. Okay. So we are simply going to wait it out. But what you do is entirely up to you. Now, the lot size that you decide to do is also up to you. Me personally, I've done a lot size that if it hits my stop loss, it ain't gonna matter my next trade. My next trade can still be the same stop loss. It's not gonna hurt me like that. Okay. So I need you guys to understand that risk management is everything. Okay. You don't need to go in massive. You don't need to go in big. You can go in small because small wins sooner or later all add up. Okay. So just bear that in mind. Someone's put, I have a separate account I use for swing trades. As you said sell, they said buy. Lol. Okay, so first and most importantly, being quite frank with you guys, I don't really care. I've made like in excess of $10 million pounds trading. So if I was taking people's signals, then, you know, would I be here right now? Probably not. So I don't really care. Some people enter a buy, some people enter a sell. I look how it's moving very slow right now. Okay, it's probably due to the time. Okay. However, I can hold this trade and it will not matter. Okay. It will not matter if it goes into, yes, in an ideal world, we all want to win. Okay. In an ideal world, we all want to win. I completely agree. But at the same time, you need to be able to take some losses with your wins. Right now, we're sitting in about 10 pips profit, give or take. If this comes down and hits TP1, then you guys all made money for free simply by jumping on a Zoom call. Okay. And if it didn't, well, guess what? We all learned a lesson today, including myself. Okay. But it is okay. So we will just simply wait. Like I said, this particular move, I would have entered. Okay. I would have entered typically on the line, but you have to wait for the following candle to finish. It just is the way that the game works. Okay. So it is what it is. It is what it is. In ish, we trust. Slow ish. I don't spot the way you set on the big red block. Just affects trend lines. Thank you. For every sell, there's someone buying. Absolutely. How do you think we make our money? You guys want to know the reality? Yeah. The reality is when you win, somebody lost. Okay. So that's how this works. FYI. This is how this works. All right. So I'll put my stop loss in. Let me just make sure everything is in correctly so that I don't get anyone saying, oh, it touched my stop loss. Didn't touch yours. Blah de blah. 7. Modify. It's done. That one's done. Modify this one. 1597. And then my TP. Okay. All right, cool. So here we have it, ladies and gents. It's 5 minutes in. My screen's blue. That means I'm in profit. This gentleman sitting across me, his screen is blue. Now, if it's in blue, we say it's on you. It means you either take the money or you don't. Now, TP1 that I've got here is 86.5. Okay. Now, it might touch that, it might not. I'd like to think that I got the reversal point pretty right. How ironic that there's TP1. Lol. How ironic that I said the best entry would be at 50.90 and look where it has dropped from, ladies and gents. Okay, you can't make this up. Okay, I'm not a wizard, but FYI. Right, so TP1 got touched. Okay, FYI. But anyone that's like, oh, I wanted to catch 30 pips, congratulations, you caught 30 pips. Now, we have 1 minute, 46 seconds left. Let's see where this wants to go. Does it want to break through and go to TP2? I don't know. But the way I see it is we are like, there's no way that any of you are going to go and take a loss on this trade because it's unnecessary to, right? It's unnecessary. You can move your stop loss now, for example, into profit or into break even. We are halfway between TP1 and TP2. Okay. My trade is still running. For example, I've moved my stop loss to break even. Everyone is up. You do as you please. Okay. So it's dilly-dallying around TP1. If you guys have made money, drop me a message. Say that you've closed your trade and you're up. You've taken the TP1. You're like, cool, I'm in for my 30 pips. I got my money and I'm out. Yeah, let me know. It'll be really, really nice. Close TP1. Fan-fucking-tastic. Oh, sorry, I'm not supposed to swear. Profit, profit, profit. Guys, take your profit. Great. I'm glad you're taking your money. For the person that messaged me and was like, oh, this group put a buy in. Yeah. You know what I want you to do? I want you to come out of that group, okay, and delete it. Okay. Because right now, those people are what, 40 pips in drawdown? Why? Why be in drawdown? Who wants to be in minus all bloody day? It's long. Right, this is still there. Okay, so now, because of the way that this candle formation finished and it left a fair value gap, high probability it wants to push up a little bit now. I could do one or two things. I can afford to watch this trade go to zero, but because I'm up, I'm going to close my trade. I've taken the profit. How much should I make? 200 quid. Say no more. I'm happy with that. Okay, cool. Now, what you can do, okay, so now that we're all out and we've all made money, okay, so thank you very much. What we can do, okay, is we can see how this plays out and see if we can get in again, right? And it will tell us the direction of this trade. So now everyone's out, everyone's made their money, right? Everyone's made their money. So all we're going to do now is we're going to see how this plays out in the next 5-minute candle. Does it want to come and touch this fair value gap here and completely eat the rest of the money that's left behind? Or does it want to say, no, I want to continue to go down, hit TP2, 3, and 4. And we're going to find out in the next 3 minutes and 48 seconds. That is on the 5-minute time frame. Thank you for the fire trade. You are very welcome. Profit, profit, profit. Leg ends. Guys, you guys are welcome. Yeah. So you would have closed that trade. No, no. How long do you know how long there's a round candle on it? I can't work it out. Okay, so basically on Trading View, there's a timer here under the price. And depending on what time frame you're on, it tells you how many minutes are left on that time frame. Okay. So that's how you can tell. And you also have that functionality on MetaTrader 5. You can find it if you just go to your settings, it will be there. £450 on holding a runner. Legend. Okay. Can you please explain more about layering trades? Yes, I can. Okay, so let's say, for example, okay, let's say, for example, we entered this trade at the time that I told us to enter, which was here. And let's say it went to shit. Okay. I've got another line drawn here because it's another zone, right? Now, each line, there's a reaction. Now, instead of slapping loads of cells in this gap here, yeah, you're better off slapping another cell right on the line, okay? That way, you have a higher chance of getting out of that trade, okay? Because there'll be a reaction from there. Now, let's say, for example, you get disrespected again, okay? And you are, oh, TP2 almost. Let's say it gets disrespected again and it goes higher, okay? Then you would enter at the next area, which is here where our stop loss is, because it's the top of these wicks. This will give me the next reaction. So my next entry would be there. So at this point, I've only got 1, 2, 3 entries. This is the correct way to layer. It's not about slapping in a bunch of cells in between all of the like, random prices, because you're just going to put your account into a deficit for no reason. Your goal is to come out of the trade in profit. The way that I rarely lose is because I'm able to know where these zones are because I can draw them out, and I'll always enter on the line. That way, as soon as it touches it, I get a reaction that could throw me back into profit. And that's all I want, right? If I'm back in profit, I'll close the trade and I'll say, phew, that was a close one, didn't blow my account, made some money, but it didn't do what I expected it to. Back to the drawing board, we go again on the next trade, okay? Cool. Let me go back to some more of the questions. Firstly, thanks for your guidance and your time. My main issue so far has been back-to-back zones sent a minute apart. How do you tackle these as they're 100 pips down? The second one hits chairs. The back-to-back zones sent a minute apart. Okay, so if we're talking about the zone and analysis group, my recommendation, just my opinion, okay, just my opinion, I'd have at least £2,500 in my account, yeah, because the zones group is very active and it's also designed for people that can read the charts well enough, okay? So, like, not ignore it, but just understand it that you could be, check your trade, mate. You could be in a position where I wouldn't jump in that as if you're too new, okay? So if you're too new, I wouldn't be in that group personally, okay? It does take some more understanding so that you can manage it better. You know, if you manage every trade, you'll always get out. Oh, hello, TP1, TP2, TP3, and that looks like TP4. So once again, that person that messaged me and was like, they just sent in a buy, you let them know that they just slapped stop loss, 120 pips. Killing it, mate. Okay, cool. So let me go back. How do you know it won't break structure? I don't understand the question. What structure are we talking about? Oh, this is clean. Look, if I go on the 15 minutes, look how clean it looks. Ta-da! Clean. We're catching pips. Too bad we're not in it anymore. I know some of you are because you're just degenerates, basically, right? But that was a nice 120 odd pips. And if she drops and melts, that's 230 pips. Oh my God, I'm going to bed with a massive smile on my face. How do you also trade on a higher time frame, like the day? No, there's no point. Don't do it. Don't do it because you're here for cash flow. Okay. So the smaller time frames allows you to do cash flow, go in and out of the market. Okay. And as you start trading on a bigger time frame, trades typically last a lot longer. Okay. So I held on laying and made loads of money. I'm so happy for you. Send me a tenner. How do you calculate pips? Always confuses me. Oh, I know exactly how to calculate pips because it is money and I love money. No joking. Right. So let me explain this to you. Yeah. Currently, we entered this trade at say 1590. Okay. Which is $5,090 per ounce. That is the value of gold. Okay. Now, for every $1 it moves, so if it goes to 50.89, okay, that is $1 difference, okay? That $1 difference in gold terms is times 10. So it's 10 pips. So for every $1 it moves, it's 10 pips, okay? So if I put £1 on that trade and it moved $1, that $1 is 10 pips, so my £1 has become £10. Okay. Now we enter that 50.90. It's currently at 50.79. So that's 110 pips. Easy maths, or $11, however you want to say it. But we're going to talk pips. That's how we'll do it. As it's dropping, where's the next strong buy zone? Good bloody question, right? Well, I'll tell you for free. So let me go for 15 minutes. So firstly, it's none of the TPs. Yeah. They're made up. Yeah. I spread them 30 pips apart. Okay. My real TP is this bad boy right here. Okay. But no one really holds their trade that long. Okay. It's 200 pips, 230 pips away. That was my real TP. Now, if I look to my left, the reason that was my real TP is because look at all the reactions I've had off this line. Don't worry about the other mess. It's the main ones that have bounced off it. That means there is a high probability that this will bounce if it touches here. So to answer your question, is at 50.67. If I'm awake and I happen to be on my phone and I happen to want to, dabble in the market, okay, I will most likely enter here for a cheeky buy just to see if there's a reaction, okay? If it fails, I will look to the left here on this cluster, okay? And I'll draw another line where it bounced the most, which is right here. Can you see the bounce here? And all the bounces here, look, right here. So my next entry would be 50.61. Okay. That'll be my next entry. So if it failed me, okay, I'd hold the trade. Yeah, because it's only a matter of time till it bounces, right? So I'd enter here first. Let's say it said screw you-ish. You don't know me, right? Talking like gold, like it's my partner. You don't know me, right? So imagine the next entry will be here. If this failed me, I'll be like, oof. Now you're playing with my emotions. Lol, I have none. What I do then is I grab my horizontal line again. I look for the next zone that is bounced off the most, which is here. Okay. And I would enter again at 50.56. And then by then, I should, right? Let's say it just was like, no, I'm going for it. I'm going like, it tried it, but didn't, and it flew down. But then here it bounces and it comes up to like here. Your overall profit on your MetaTrader, you're in profit. Although you're here and this trade isn't even in profit anymore, the fact that this one is, because you caught it, and this one is, you're good. You're good to go. You can close the trade, you've made the money. It could potentially come all the way back up, but obviously at the end of the day, it just depends about your risk appetite. Okay. How much of a gangster do you feel like leaving a trade on all night, right? Or how long do you want to hold it for? Just depends. Like I said, everyone's circumstances are different. So it's fine. But that's how I would enter this for the buy. Just FYI. Well, look how far down it came while I was talking. Go back to 5 minutes. Bloody hell, 50.73. Oh, I bet you lot are pissed you closed at TP1. I'm joking. It's all right. We only missed out on 170 pips. No big deal. We'll just catch you later. All right, cool. Let me go back to the questions that you guys have. What if it breaks all three zones? Oi. Do you call it a loss and take the L? What is the most pips you afford to lose on how many bets combined open at the same time? Question of the year. Okay, look. How I trade is very different. Firstly, my lot sizes do not affect my account. Okay? They don't affect my account. My balance is fat. And because it's fat, I can go in plenty of times. So I trade still quite small lot sizes because I do layer and I do end up catching a lot of pips. And the reason why I catch a lot of pips is because I wait. Look, if it broke this zone and broke this zone and broke this zone, and I've entered here at 58, let's say 50.67. You know what? Let's bloody work this out. You lot want to know real maths? I'm going to give you real maths. It's maths time. Let's say I'm currently doing, say, a 0.5, for example. All right, let's give it some context. No, fuck it. We're going in with one lot size, right? So one lot size at 50.67. Okay. And it goes to shit. And then I enter, so it goes to 50.61. That is 60 pips. I am down 600 quid. Right. So this entry for me is minus 600 quid. Then I've entered again a one lot size at 50.61. For example, and let's say that's gone to shit and it's gone to 50.56. That, ladies and gents, is 50 pips. So it's another 500 minus. Then I've entered another one lot size. Okay, at 50, sorry, size at 50, 56. Okay, and I've entered another lot size there. Okay, at this point, at that entry, I am down, yeah, 1,100 quid. Oh, would you look at that? Look, what's going on? What's going on? Hey, who wants to risk it for a chocolate biscuit? I've entered. All right, so this is just moving mad right now, okay? If you wanted to risk it for a chocolate biscuit, because the market is moving insane. Bear in mind, there's only 29 minutes left of the market. It's super duper, duper, duper dangerous. High risk, red alarm bells are going off. You would enter here and you just catch this reaction. Yeah, just the reaction. Like a scalp, you'll take some money and you'll get the hell out. Yeah, that is option number one. Let me, wow, that just, oh my God, if we stayed in this trade, you lot flopped. Well, that's lovely. So here we've clearly got the reaction that we were looking for as I was talking about it. So if you entered here, for example, right now you should be in profit, or you would have made some profit already and you'll close it. It's like a scalp. You come in, you grab some change and you get out. Yeah. That is what I would do on this. But once again, typically you want to wait for the 5 minute to close, but these are reaction points where you'd expect the reaction. If it was to break that, it's gonna go. So all I do is I look to the left. On the next area, straight there. Oh, get rid of that. I apologize, ladies and gents. That'd be my next zone for the buy. Take the money, bro. I got someone sitting opposite me, just taking thousands. All right, so if anyone entered, I entered, I'm up 300, 300, 400, 500. All right, I'm going to take the money. 300 quid, 300 quid. I'm out. I'm out. Took the moolah. Took the moolah. Right, that was a massive move. Take it. Take it, take it, take it. Because it's extremely volatile right now. It can fly down as fast as it flew up. Okay, so take the money. If you guys entered, who entered this, by the way? Just tell me if profit. Just say yay or nay. Oh my God. Oh, would you look at that? You lot are just, you know what? When I'm older, I want to be like every single one of you. I want to be like you. I want to be like you. Profit, profit, profit. You're a legend. No, you're a legend. Easy money. Hey, sunshine. Nothing comes easy. So it's 10 years worth of work. All right? This is 10 years worth of work. Take the money, guys. Take the money. You lot milked it. That was a milkage. Look at that. From our, oh, you can't make this shit up. Look at that. From our line, pew, straight up. Yeah. So I am really, really glad that you guys all smashed it. Love you ish. Thanks, mate. Yeah, this when you just this is when the market is like being how mad is that? Could you imagine last week when it was moving like someone was like it's like watching paint dry, and I was like, yeah. And then today, right, why? Let's find out what is the reason. What is the reason? What happened? Did something happen is the question. I'll just go on the old Telegram. I have a channel there where I can see what is going on in the world. I just want to know if there was a message put in there. No. Uh, just in US, you in the US, nearly $1 trillion wiped out from the US stock market today. Cool. That's all the info I know. Wow. All right. Well, look, you guys made a lot of money. So everyone go and buy some Snickers bars or whatever you want to do. Please, can we do another? Guys, listen, I do have a bed to go to. All right. Um, so look now, okay. All right. Let me just give you guys some insight information. Oh, this is a fat sell. Oof. And then it was a fat buy. See how quick it flew up? Jeez Louise. Look, if I go on a 1 minute, which is for crackheads, so let's not talk about that. But if I grab the ruler in 1 minute, not in 1 minute, but in 5 minutes, it pinged up 160 pips. Wow. Okay, cool. So now it's really dangerous to get in on the market because we've had the bounce. You don't know if it wants to come and retest this area or if it wants to keep going up. It's almost like it's still mimicking this sell, but that as well, you'd have a reaction point. Like I literally circled before it did that. So I'm really glad. All right, guys. Well, what is the name of the channel? Watcher Guru. There's a channel on Telegram called Watcher, like Watcher. So watch and then ER, then Guru. And basically it just tells you about the news. I try and stay up to date with it. So it just gives me updates on like you know, on like what's going on in the US mainly. Does the lines and zones that you've drawn are invalid now, or could you still be using them? 100% you can still use them. They're good. They're good. They're good. You know, they are good to rock and roll. Look, but now they might just act as a small reaction because it's had the big reaction. So, I mean, I don't want to advise anyone, but I would say like you don't need to be in the market now. Like you took some money. If anyone's going to stay awake till Asia session, oh my God, I'm on 1 minute. That's for crackheads. Don't do it. Okay, so yeah, if you guys want to wait for Asia session to kick in, then because we've had so much sells, we could have a massive push up and a buy. I'm just going to delete everything so I don't need it. I can draw this a million times. I'm going to go to 1 hour time frame. Like if I go to 1 hour time, you can see all these fair value gaps. And all of this can look 1, 2, 3, 4, 5, 6, 7. And this is the 8th hour. And there's 19 minutes left of the 8th hour. For 8 hours, gold has been selling. 8 hours, ladies and gents. Surely there's an hour in there that wants to buy. Okay, so on this, I go down here, I draw my line, and wherever I believe this had a million touches or a lot of touches, touch, 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 lots of touches, and we can get a reaction from here. You could buy from the bottom here, but right now there's only 20 minutes left of the market, so don't get caught out. So just hold tight. But on that note, ladies and gents, I am going to love you and leave you. You guys have been absolutely bloody brilliant today.